Good morning. Thanks for stopping by. This is Dr. Weiss Money from drweissmoney.com. Today I'll be talking about buying a house or two or three, as many as you want as a resident or, before you become an attending. I have a very fantastic mentor that many of you know, White Coat Investor. He strongly advised against buying a house. Even when I was going through the process, he was really trying to talk me out of it. And I still think he has a lot of good, valid points against buying a house in residency. However, everybody has their poison. My poison might be real estate, but it has worked out pretty well for me as I am PGY2 right now, at the end of my PGY2, about to close on my second home, which is a dream home. Again, it's not a huge mansion. It's just somewhere that I feel like I walk into it and it feels like it welcomes me as a home. So just want to share a little bit with you, since I've worked on getting mortgage and refinancing 4 times in the past 2 years, less than the past 2 years. And I've learned some painful, difficult lessons, and I would like to share so that you can avoid it, and that you can land like on the best house and the best mortgage that you can get in your circumstances. So number one, I knew I want to buy a house. No one could talk me out of it, not even White Coat Investor. I knew I wanted to buy a house as soon as I match. So I know I'm going to go for a doctor's loan, which requires either 0% down payment or 5%. I believe with Bank of America they require 5% down payment. But all doctor's loans pretty much requires no or very little down payment. And the nice thing about it is that there's no private mortgage insurance. Generally, if you go for a regular conventional loan, that's not a physician mortgage, you will have to pay private mortgage insurance, which is a couple $100s a month, if your down payment is less than 20% of your purchase price. So that's the nice thing about doctor's loan. And the other nice thing about doctor's loan is that they will take your contract, which is your future pay. Generally, if you're going to start your job within 3 months, they'll actually take the contract as your actual income to calculate if you can afford a house. So I knew I'm gonna match within the top 3 of my match list, which statistically is true of 98% of us. So what I did is, as soon as I submit my rank list, I started looking at 3 different housing markets in 3 different cities that are the top 3 of my rank list. And as soon as I know where I match, within top 3, number 2 actually, but which I feel really blessed because I end up loving this place more so than my top number 1 choice back then. So as soon as I knew that I'm coming to Tucson, Arizona, I started put all my effort into watching the market in Tucson. If I could have done anything differently, I would probably start looking at housing even earlier, so that I would become more familiar and well read in terms of the trends of housing, what houses are truly worth and their value. So so as soon as I got my match information, I basically contacted some realtors, and there was this very fantastic one who got back to me, and he was willing to show me 25 houses in a day. So drove out from California to Tucson and looked at 25 houses in a day, and then pretty much went back to California shortly thereafter. So if I could do something differently from there, I would have probably stayed a little longer. But so then, I didn't even end up making an offer on the 25 houses I saw, but I continued to watch the market, sign up with different lists that will pop up like immediately about like houses that went on the market. So I saw a house I like that just went on market for 12 hours and got 3 offers, including mine. Got into slightly of a bidding war, but got into the best neighborhood I could afford, and it was basically one of the cheapest houses. So that was a great investment. We really ended up loving this community. But the other part is getting the mortgage. That is a lot more stressful. That is the difficult part. Anybody can go out and look for houses and daydream, which I'm really good at. So the mortgage part, I got burned pretty badly the first 3 times dealing with mortgage. Basically, You want to start with truly spending a little time interviewing your potential mortgage banker. You want to know what type, get a gist of what type of people they are. Are they empathetic, or they completely lack bedside manner in the financial sense, financial industry? Um, those are not the type of people you want to work with, no matter how good they seem they may be, or they are known for knowing their numbers or their knowledge. Um, so I say that my first couple experiences with mortgage bankers are difficult is because, I'm completely new to the mortgage industry. I don't know the ropes. See, I need guidance and I need people to answer my questions. And I'm the type of person who like to run the numbers myself and know what's going on. I don't like someone to just tell me, hey, this is the best deal. You go for it. No, I want to know it's best deal. My first experience was that the mortgage banker was a vice president of a certain bank, and there's just this huge gap in terms of knowledge, and he wasn't very empathetic in terms of answering my questions. So basically I end up teaching myself about the whole mortgage process and cranking numbers from um, first being in the dark to basically I know exactly what number he's going to spit out and tell me in advance. So to give myself that crash course mortgage calculation 101 within a month or so while trying to wrap up medical school, prepare for graduation and all that, it was extremely stressful. It was very unduly, unnecessarily stressful. And I remember it was funny, like the mortgage banker told me, when I got my loan and closed on my house and got the keys, he said, "You are the hardest working borrower I've ever met." And in the back of my mind, I said, you're a great person, but if you had helped me a little bit more, I wouldn't have to work so hard. So definitely, you gotta find the person who will teach you, who will educate you, like doctors are expected to be empathetic and educational with their patients, and that's how we build our therapeutic relationship. And that really truly should be any relationship in the world. It really should have been good communication, good education. So definitely make sure you get a mortgage banker like that. And on my website drwisemoney.com, there are plenty of recommendations. You can check them out and pick whoever you like. Once you get the house you like, and the mortgage banker that can guide you through the process and educate you, and then really the rest is details and history. Then the very last piece is just getting yourself into tip-top credit condition before you apply for that mortgage. What do I mean by tip-top? Knowing that your credit score is above 760. Most of us probably are at 800 because student loans don't really count against you in terms of credit score. Really, it's the consumer debt, like the credit cards and stuff like that. So make sure you pull your credit score, check your credit report about 6 months before you want to purchase, and start cleaning up your act. Start boosting your scores. There are many ways you can boost your scores. My website again, drwisemoney.com, shares a lot of that. And more amazingly, nowadays, a couple years now out from when I was doing this, is that almost all credit cards will offer you credit simulator, not stimulator. Stimulator is great, but credit simulators. So you literally can plug in certain actions like, oh, if I pay off this credit card by $5,000, or if I pay it off completely, or if I open a credit card, what are the impacts? Whether it's increasing or decreasing my credit score, that's going to happen. That's why it's a simulator of your credit score based on various actions you can take. So you can literally, let's say you're at 740 and you want a 760 to get the best rate on doctor loan interest rate and terms. Then all you need to do is go online and find out what are the actions that could help you improve your credit score and get it to a tip-top position, and then have your mortgage banker pull your credit, and then voila, you're 760 plus, and you are at the tier of getting the best interest rate for your mortgage. So again, to recap, 3 things: get the right realtor, someone with integrity; get the right mortgage banker who is an educator, who knows how to communicate, who is a true human being behind all those numbers; and lastly, get yourself ready. Make sure you know what your credit score is 6 to 7 months in advance, so that you have time to execute actionable things to improve your credit score, so that you can secure the best interest rate for this large ticket item. All right, well, thank you for listening. And if you have any questions, just comment below. The best thing to do, honestly, is actually going to go to my website, drwisemoney.com, and leave comments there because I check in and get usually will get a response within 24 hours. All right, until then, have a great, great weekend.